Good day, Forex traders. Good day, Forex traders. It's nice to be with you again. It's after a long period of time. Sorry, guys. Sorry, guys. I've been quite busy, always busy, doing other things. Okay. Um, but I say let me come and update you guys, my guys, on this channel because I've not forgotten you guys, and I'll keep telling you the truth. This is where living on Forex here, live and direct. This is where we tell you the truth about Forex trading. This is where we analyze the market, break it raw. We don't do hypes on this channel. We tell you the real deal, what are going in the market. So if you have been following us on this channel, please keep subscribing and sharing because here we share gems free of charge, absolutely free of charge. We also have our Telegram channel where we drop free signals for those who have been on that channel. That channel has been running for over 4 years now, where we drop signals and free of charge, actually free out of charge. This is how we do it. We give out back to the society our way of helping those who have been struggling in this game. The market each year comes with its dynamic. 2025 have come up with its own dynamic. Remember, I told you I used to be I'm a swing trader. But sometimes with the new dynamic in the market, you must have to reanalyze and reevaluate what is the current trend in the market and try to adjust. That's what makes you a trader. If a professional trader, professional traders don't fight it, guys. They just flow with the market dynamics. Your strategy or your entry must not be 100%. The ability to accept your mistakes and move on makes you get better in this business. Okay, so guys, before we move to the nitty-gritty of the day, please, I'm giving you some seconds to please like and subscribe to this channel. Keep subscribing, please. We appreciate those guys who have subscribed, our new subscribers. Please, we want you to keep sharing this channel with our friends, your friends, and those who you know who are trading, who are struggling. They should come and hear what is going on, what I'm going. Because in this video is one of the video you must have to download and keep watching over and over again because we're going to be sharing deep knowledge, advanced knowledge in this video. Knowledge that a lot of you has been. Some people have been telling, please tell us about entries, tell us about entries, tell us about entries, teach us about entries. Because I've been able to know the direction of the market, but my problem is entry. Whenever I enter the market, I don't enter right. The market will hit me out and still go to where I'm speculating it to go to. The reason is because in forex business, timing is the key. So I will be straight moving on to this the nitty-gritty of this video. So please like and subscribe and keep sharing this channel to your friends and those who are trading. We want to now move on to the nitty-gritty of the day. We want to move to the trading of the day, the business of the day. This is 6th day of July 2025. This is a Sunday. So we're analyzing the market when the market is on stall. The market is motionless. The market has closed officially. So we want to see what has happened and then we're now going to see what we are expecting to trade coming the next week. Okay, so I'm sharing my video. Want to go? Yes, this is Living on Forex. You're welcome inside of my screen right now. So this pair is Euro USD. First of all, what I want to teach you today, I want to show you how to time reversals and pick your trade, how to enter reversal trades that are high probability, setups. Trade that's going to give you higher percentage of profiting than losing. Okay? Trades that are going to give you high possibility of winning than losing. How to accurately time reversals. Okay, so you want to open your ears very well. You can even download this video and keep because you may be needing it in your course of trading. You may be coming to read, referencing to it as you try to backtest what we are about to show you here. This video, like I tell you, it's going to be a very gem revealing video. So this is Traders Focus episode 12 as well. This today will not be doing most of analysis, analyzing the pairs will be trading just as we usually do, but to tell you how you should be able to time reversals, how you should be able to enter your trade and put yourself in high probability trade setups. Okay, so now first thing first, for you to identify setups, reversals, there are two major things that I want you to know. I want you to look out for. First of all, the dynamics of the market and the behavior of the candlesticks, the market. How is the behavior? I'm going to explain all of this in the video. So you want to look at the candlesticks because price is the real deal. Price is the real deal. The candlestick tells you it's a footprint of what happens in the market. So when you have been able to identify those two things, the behavior towards support and resistance and the price action, the momentum, behavior and momentum, we'll be able to know how that this market is about to reverse. So let's now go to the real deal. Now look at this pair we have. This is Euro USD, Euro USD. Now assuming that this market, if you look at this market, is bullish. Okay. So how do you identify that reversal is coming? First of all, before you do this, you may want to plot your support and resistance zones. I'll not be doing that in this video because I've already had a lot of videos I've done, and it's on this channel where how you can draw your real support and resistance. You can go the video somewhere around. Just click on the channel, you'll see the video. Watch it, you'll be able to know how to draw your support and resistance. So I will not be explaining that in this video, but in this video we want to tell you how to time reversals and make high probability trade setups. Okay, so now for you to identify a market that is reversing and a healthy trending market. Now if you watch this pair from here, the market is bullish. Look at the first move. It was consolidating, boom, the orders came in. You see, the demand came in and then the market booms. Whoa. Now, what happens after that? You know, the market in a bullish market will always have higher highs and higher lows. So from here, it makes high, it came down, higher low, and then it resumed again. Now, for you to know that this trend is healthy yet, if you look at this, the move from here to here, and then when it resumes again from here to here, you see that this bullish move here is stronger than this. Okay? So when you see this, and look at the retracement it made, not so much of retracement, and then the next move is stronger than the previous one. So sorry, so that should tell you that this market is still strong, the trend is still strong. Now look at what happens. Now when the market made this second move, the rest came, not much of a rest, it went up, not much of a movement to the upside, it rested again and did this. Almost the same zone where it rested. Okay, so what can we say? At this point, you are not sure of what is going on. Allow the market. Now the buy is resumed again. You see this, the strength of the buy is not as compared to the previous one, is not strong. And then it rested and then moved this move that looks a little bit strong, but not as strong as this. So when you see the next move, the next impulsive move, not as strong as the previous impulsive move, it shows that the trend is weakening. Are we together? It shows that the trend is weakening. So observe what happens next. Now you see after this consolidation, the markets pulled aggressive move in this region. Okay, let's say this region is the resistance region. As it's getting to the resistance region, is strong. So when you see market going, I told you, if you see market going strong aggressively to your resistance, it shows that it might break that resistance. So don't just pull a trade, don't just pull the trigger. Allow the market to do what it wants to do in that resistance to know if it's going to break or reverse. So observe. Now look at what went on. The market pushed from here to here to the resistance and then rejected. Tested it a little bit and then fell. Now, if you look this move, where the market started to make this move, and here, it's like 100% retracement. This is a V formation. Hit here, bounce off, and came down. Okay? You see how the market behaved? It bounced off and came down. From here, it went, and then it fell making, making, you see that move there? So it made the move up, and then the same equal strength put down the same way. From here to here and from here to here is the same move. Now, this is the first sign for you to spot that reversal is coming. It's not necessary that the reversal has come, bro, my people. It's not necessarily mean that reversal has come. When you see a market move and move equal high, like equal movement that is made to the top, this move here and this move is 100% retracement. So when you see, first of all, the trend is weakening, the newer moves are not stronger than the previous moves. The newer move is weaker than the previous move. This is the first sign you'll be able to identify that, yes, this trend is weakening. Is either reversal is coming or retracement is coming. Now, the second thing you need to watch out for is that 100% retracement. So when the market move, look at the rest it took here. After making this, look at how it rested. Not much from this aggressive move. The rest was not much. But then when he made this, he rested small, and then he made this move, and then you look at the rest. The rest consumed the move entirely. So it made a move and then rested 100%. So when you see that 100% retracement, 100% pressed, it shows that reversal is coming. Now, when this happens, what should you expect? What should you wait for? The next move, you have identified two yardstick that shows that the market is about to reverse. The first yardstick is that the aggressive move to the top, the aggressive move, the new impulsive move is not larger than the previous impulsive moves. Market makes impulsive, retracement, impulsive. So the new impulsive move is not equal to the previous impulsive. It's not stronger than the previous impulsive move. It shows that the strength of that trend is weakening. But if you look at this impulsive move and this one, you look at this second one is stronger than this, the first move. It shows that the trend is still healthy. So you don't want to look for sales in such a market. You want to follow the ride with the trend. But in this case now, this impulsive is stronger than this and this. It shows that the trend is weakening. And then we'll get that 100% retracement. This is another second thing you should look out for. The first, the weakening of the momentum, the weakening of the trend. The second, the 100% retracement must happen. Okay, so you see this 100% retracement is the next thing you look out for. This again shows you that, whoa, they are not longer strong, they are about to reverse, because from the dynamics we've seen so far, it shows that this trend is weakening. And now we are seeing 100% retracement. This is another thing. Now, the next thing you need to wait for is to wait for another push up that could not make any new highs. You wait for the market to push up and refuse to make new highs. So if you push up and refuse to take out this highs, it shows that the trend is over. The market is about to reverse. So let's wait and see. After this 100% retracement, the market pulled. And if you watch how it's going up, it's no longer going up aggressively. You're not seeing these larger candles. You're just seeing small candles. It pulls, it goes down, it pulls. So the market started ranging. So at this point, what do you need to do? You need to wait. Guys, this thing I'm telling you, patience is the key. If you wait for this setup to bounce, to give you a clear direction, you are going to, when you enter your trade, you'll be asking if it's magic. Your trade will just be banging in profit immediately you go in. So you wait. So what are you waiting for? You're waiting for the market to give you aggressive move downwards, okay? That clear up this region, this consolidation region. If that does not happen, you are not pulling the trigger. All of this region here, all of this region that the market is consolidating, you want to wait for aggressive red candle that takes up all of that region. So let's watch. Let's watch. The market is still ranging. Whoa. Now we've gotten that push below rather. We've gotten that push below. So what do we need to do? We need to see, I want to go up, but I cannot go. I die. That kind of a move. Going up and then forming, giving us a rejection, then that is when we are pulling a trigger. So we couldn't get it here. So guys, you see, so when that stuff came up, look at the candle here. Look at the candle. That rejection, I want to go up. I could not. I die. Look at it. I want to go up and I die. So guys, after this this rejection candle, anything you do, any trade you take in that after that rejection candle, push your trade gives your trade a high probability setups. So, so guys, it puts your trade, gives your trade a high probability setup. So when we see this, we take our entry, short position, take it here after this setup. Sorry, my network is kind of bad. My network. Okay, so sorry for that. The network broke us out. And then we are in. So like as I was saying, so when we see that I could not go in, I could not go up again, I die. This rejection candle, we pick our trade. Okay, we take the sell trade. Your entry and your exit should be, your stop loss should be a little bit above of the previous rejection, and then put it down 2:1, maybe in this resistance point. Okay, you go to the next support level. That's your take profit. Now let's allow this trade to run and see if our take profit will be hit. Instant profit, guys. You can see it went aggressively to our TP, exactly our TP spot. The market, after this rejection candle, you see the next candle, it moves. Now, guys, haven't seen this now. This is how you spot, you make your entry. When you take trade, anything above this break out of this consolidation region, you put yourself on a high probability trade. Remember, this trade it was going up, but now we counter the trade. Now, you can do this both ways. We've done for the sell. Now, since we said that this market is when we see this thing happen, is two things that want to happen. Is either the market is about to reverse entirely, the trend is about to reverse entirely, or we want to have a retracement. Remember, impulsive retracement. So the retracement has come in, we've entered. Now we've gotten to a trend line which acts as a support level. The market came and bounced off of this environment, this trend. Now, some persons, when they are trading, they draw their trend line. When market hits their trend line, boom, and rejects, they buy immediately. Well, we are not saying that such strategy is not good, but one thing you need to understand is anytime you see a market hit a support level and a resistance level and reverse immediately, there is 80% possibility that the market must come back into that region to retest. So you might be unlucky that the market might come for that second retest and take up your entry, hit your stop loss, and still go to your expected direction. Now, the reason why that happened is not because your village people is after you guys, and it's not because the market makers are just watching your trade. No, it's because of how they trade. When you understand how these people trade, these guys trade, you will understand that this is why you see sometimes we call it manipulation in the market. These guys have large orders. And there's what they call orders not being filled. You as a retail trader, you have small money. So there is high possibility that anytime you just click buy or sell button, the trade triggers immediately. You are entering the trade. But to these guys, this is not how their own trade triggers. They have large orders. So, and they cannot put those orders at once because the system has to process it. So what they do is, if they had $1 billion to enter the trade, they take it bit by bit. If they want to sell, They will divide it maybe into 7 entries or 10 entries or 15 entries as the case may be. They will be entering it one, 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 one. And as they are entering it, the market is moving. Okay. So if the market hits here, that region you are looking at to buy, every trader in the world is still looking at that region to buy. They, the market makers, are still looking at that region to buy. Everybody wants to buy in that region. So expect that the market will bounce off, and as people are putting triggering the buy, the market will just react immediately and start buying. And that is why you see it happens. Immediately market reach the zone, a reverse. But then the market must surely come back to test that place, because whenever the market hits a region and reverse immediately, knows that the market makers have not finished putting their entries. And they want to buy on a very low price to sell high. So if they have $1 billion to sell to buy, and they've just put out of that 1 billion, $300 million, they still have 700. And if they don't take that trade, they are on the losing side, because the client was giving them that money to make the profit. So they will be calculating based on the amount that was given to them. So when that money is not in that trade, to them is a loss. So what will happen? They will have to drag the market down again, so that they will put all their remaining orders before before they will allow the market to move. Understand this concept. So once you see a market hit a support level and reverse immediately, know that these guys have not finished putting their orders. So if you missed it and say, I missed it, it has started buying, relax. 80% of the time, it's going to come back to touch that region again. So I prefer a trade that plays around the support and the resistance level a lot, takes time to build. Such trades, when the orders start entering, you have higher possibility that the market will never come back there, because the big boys are there, they finished putting their orders, they are locked in, and then the trend is about to kick start. So now, from what I've been teaching you, now the market came to this support level, which is the trend line, which acts as a support, and then bounce off. Boom. So what do you need to do? Observe. Remember, we said we were selling because of the reversal signs we saw. We were selling, and now we want to see a lower low, lower high, lower low. So this is like a lower low. We want a lower high and a lower low to show that this trend is still in place. Then as the market bounce off, what happens in the future? Let's go. Let's play. Let's play. Let's play. Let's play. Let's play. You see the market bounce, and the market is not making any new highs. It's just consolidating around that zone. Shows that if you're in that buy, something is about to happen. So let's see. Whoa, you see, the market came back to test that region. And then when you look at the candlesticks that are coming, the buys, they are not strong. When you start seeing those aggressive candles, those BB candles, that is when you should know that the market makers are in that trend. So in this case, the market refused, it came down. The next try it made in this region, the market could not make any new lows. So it shows that this trend, this buy trend, remember we are in general buy. All this we saw is kind of a reversal. We counter trend the trade. So we want to resume this buy, because this low and this next one, this one could not take out this one. It barely make a new lower low. So the buys is about to resume. And then what do you need to do to wait for the buys to resume? Now look at where this sell started off. We want a break out of that region. We want to break out of that region. Once the market breaks aggressively above it, we know the buys has resumed, and then we will now be looking at our trade. Now look at this. The market has started the market. Okay. So guys, now we look, we sold, came back, but we could not make a new low. And then let's watch. Now remember, if we want to buy this market, we have to wait for this market to break this region, because it has to make 100% retracement. The sell side and the buy side needs to be equal. So remember this sell, this is where it started, it came down. We want to see a buy that will take off this region, then we know we are good. Okay, so we saw that aggressive candle came from this particular region and rejected. So we have to wait. We have to wait for that aggressive move, breaking that region. You see, I'm taking my time to explain this, the both ways. so that you'll be able to go back and backtest it. And then we are waiting for that aggressive move to break this region before we pull our trigger. Now, the market has broken this environment now. What are we do? So we cannot see that we are generally now back in the bullish trend. If you look, lower high, lower high, higher low, higher high, higher high, higher low, higher high. So it's making these highs, this one is lesser than this. This high is higher than this, and the new highs is higher than this. So it's making a new series of higher highs as it's going up. So this is telling you that the trend is resuming. This bullish trend here, this bullish trend has resumed. So what we are just waiting for is to join the trend. So for you to join the trend, you have to be time conscious, because timing is the key in forex. You might be in the right direction, but in the wrong timing, and you still lose that trade. So timing is the key. And this is what I'm teaching you, how to time your trade. So if you wait for all of this to happen, guys, you have filtered all the nonsense that would have happened in all of this region. It's not about I cut it from the below, I cut this trend from below. That is not, you're not here to make a perfect execution, but here to make a money, here to make money and put yourself in high probability trade setups. Because this trying to catch the under, you might catch it today, tomorrow you lose it. And this is where all the manipulation happens in these regions. So when you wait for all of this to happen, you have filtered all those junk trades you have taken in this region. So now, as the market broke this region, we want to wait for a retest and rejection off of that red bar here. Then we pull our buy order and target the next resistance point. That's the drill. So do we have our retest? Do we have our retest? Boom. Okay, the market has retested. You see, the market did not retest it perfectly the way we wanted, but you see this strong candle, black candle that is coming in. We still need to wait. We want a clear breakout of this with an aggressive move and probably a retest. Then we are in. So as we proceed, okay. So guys, okay, now we are broken out of the region, and then you see the breakout and retest. This is where we are pulling our trigger, and then we are setting our stop loss. We have that inside and break out of that region, and then we have these red candle that came in and tested it and rejected it. This is what we are looking for. So we now pull our buy order, buy position after the red candle. So our stop loss will be below this level. Okay, below this level, and then our TP will be in the resistance points. Okay, so our TP should be here. Okay, so let's go and see if the market is going to hit our TP. Oh, okay, the market went halfway and is coming down again. So probably the market came down to test the trend, probably for a last kiss. Okay, and then we'll see that rejection. What happens? Trade is still in progress. The trade is still in progress after some meandering. Whoa, our TP smashed. Okay, so guys, you see the TP has been smashed. The trade took off the environment. So guys, this is how you're able to spot reversals and take a good entry that anyhow the market delayed, make some manipulation, you are on a profitable trade. We saw how I read the market. It's not by catching it below. Don't try to catch it below, please, because once the market hit a support or a resistance and reject, You don't know what is happening. You don't know what is happening. But when you read the market dynamics from as the trend is coming, how the behavior of the market towards the resistance or the support region, we'll be able to tell you, okay, these are the signs that is showing me that this this resistance or support is going to hold, this resistance or support is going to break, the trend is still healthy or the trend is losing its momentum. This is what you need to do. Okay. So you see how we read the market? When you read the market like that from all of this environment, when you read the market from all of this region towards your direction, you have been able to see that the market is going, where the market is going, and then you are making yourself a high probability trade. This thing I tell you, I'm teaching you today, is no-brainer. It works perfectly. You just need to go back to your chart and backtest it. So guys, that is how you'll be able to spot reversals and take accurate trade. But for you to successfully trade this pair, guys, you have to, this strategy, you have to be patient. Allow the market to play out perfectly to give you a clear direction. Read the market from as it's coming towards that environment and the way it's behaving towards that environment. That will be able to tell you that this trend, this direction I want to go is the right direction. Remember, I told you the market comes in a region and reverse around it. Shows it has 80% of coming back to that point. Look at it. The market came back, tested it just like spike and rejected, but later it came back because the big boys who want to ride this train, they are not completed their orders. So as they are putting their order, the market is buying and they are getting higher price. So they don't want higher price, they want to buy high. They want to buy low and sell high. So they have to drive the market down again toward that environment to put the remaining of their trade so that they can ride the train. And that is exactly what happened here. The market came and then pushed. And the same thing happened when we took this trade here. The market came, rejected, came down again to give them a better price. But now, the difference between this move and this move is that the candlesticks, the strength of the candlesticks are stronger. Now, when you see candlestick, aggressive candlesticks, stronger candlesticks like this, it shows that the big boys are in that trend. Okay, so if you did not wait, if you could not catch it here, if I was in this market and I could not catch this market here, and I saw this rejection towards this environment, and then I saw this rejection and it's this strong candlestick. Once I see this strong candlestick, aggressive candlestick breaking this region, I will just wait for a retest. This is where I would have pulled my trigger. This place, this rejection here. This rejection here is where I would have pulled my trigger. Once the market came back, retested it, I would have entered my buy trade here and I would have still been in profit. Okay, so this setup is very conservative. It helps you to filter out wrong trade entries and put you on a high probability trade. So now Euro USD, what can we expecting come this week, Euro USD? So we have to do the same thing, read the market dynamics. So now we are on a bullish trend. As you can see, the market is making new highs. The market has broken this previous high here, and then it's going up and it's going up. So now, what do we expect come this week? Now, as this market is coming, look at this move here and this move here. Okay, it shows that they are almost the same strength. But then, each time it makes a new move, look at this next move it made. It could not take, it barely made a new high. It could not take out this previous high. And then rejection came, consolidated, and make another move. This time it broke. Eh? Jere o, Biawa. My pause. So this time, okay, so when you do that, you'll be able to have a high probability trade setups. And you put yourself in a nice trade setups. So just go back, guys, backtest this strategy, backtest it, and try to make entries and exit and see how it's going to work for you. So come this week, what are we expecting Euro USD to do? Euro USD. You see this trade, this impulsive move, retracement, impulsive. This impulsive is not as strong as this. That is to tell you that something is happening. Trend is weakening. And then we have this aggressive move to the top, which made a new high, but it's not as strong as this. But then what happens? We started seeing rejection off of that zone, impulsive rejection. But one thing you need to note what here is that this impulsive move here to this one and this rejection is equal, is 100%. So criteria one has been fulfilled on this. There must be 100% retracement. So when this impulsive move started and this retracement, we have 100% retracement. And then the next thing is we want to wait for another try to the top side that could not make any new high. So the other try came in here. It couldn't make any new high, couldn't take off these highs. And then we saw this sharp drop. And the market is going again like a bullish, like going up. But if you look at the size of those candles, they are thin candles. So they are moving choppy, chop, choppy, chop. So we know that the high possibility that this market is going to hit this red bar or close to it and then fall. So when the market fall breaks out of this region, breaks out of this environment with an aggressive push to the downside, a red candle, a red bar, then that is when you should put up your trade. As you can see, the market has started consolidating in this region. So wait for a breakout of this region, then you sell. Because from what we are seeing, the buys have weakened and the buys are no longer coming in. So let's go to gold now. With the same concept, we want to see what gold is doing. So if you look at gold, we all know generally gold is a bullish trend. But as you can see, the market moved from here that the market started by a strong retracement, strong retracement, strong. You see this stronger than this. Okay, it showed that the trend is still healthy. We saw the retracement, not deep retracement, and the trend resumes. Although this move is not could not take off much of this high, just a little bit shy of it. And then, so at this point, the market is making new highs, little bit impulsive move to the upside, but the trend and is not strong. Like it's not, it shows that the trend is weakening. Now watch this move. You see this move, an equal retracement, 100% retracement. So wait for that last push. It came choppy, 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 chop, and hit in this environment. Now, when it gets to the resistance, look at how much it took. How many candles? This is 4-hour candle. 1, 2, 3, 4. Let me remove this circle. You see this 1, 2, 3, 4, 5, 6 candles to that top. 4 hours, 6 candles before the pullback came, the rejection came. Once you see this happens, it gave me, I took this trade, guys. I took this trade and it actually banked, it hit the target. Because when you saw this, the time it took for this market to play out before the move came in, it shows that the big boys have locked in their orders. And that was why the market played around this region and then the market dropped. And then as it dropped, what are we waiting for? So we now have our left shoulder, our head. So if you did not take this trade, wait, you still have opportunity come this week to take this trade. Now the market came in down and then give us some retracement. The drop, but the drop is not sharp. The drop is just choppy, 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 choppy. So once you see this choppy, choppy move, it shows that that trend is not even strong. So we know that it's going to reverse, but it has not started the reversal officially because of this choppy move. We want to see aggressive red candles showing that the big boys have entered the trend. So what do we see now? Market came in here and then bought back. And when it bought back, the sizes of the candle begins to change. It gave us a new impulsive move to the up, but could not make a new highs, forming the right shoulder, exactly in the region of the left shoulder it fall, and then look at the size of that candles, and then the market broke down. So the market has closed with this impulsive move to the top, to the bottom. As the market broke, you see that aggressive moves, those candles, the size of the candles has changed from these ones. Look at the size of the candles now. So this shows that this trend now is in place. The big boys have put their orders. But now, since you missed this move, how should you join the trend now? So for you, come this week to join this trend, we saw a new lows, higher highs, lower high. This is lower low, lower high, lower low. And then we have a new high, a new lower high, but this lower high could not take off this. If it has broken this region, we will say, okay, the trend is about to shift. But it came exactly in this region and started consolidation. So it's not making any new highs. So what do we expect? So come this week, we want the market to push, chop it to this region. That is what I am expecting this market to do. I want the market to come to this point, reject with an aggressive move, come here, retest, and that is why I should be looking at selling this market. So when I this is where you're going to sell. The reason why, okay, let me just put this sell here. So the reason why I'm expecting this market to sell here, to make this type of move, because if it makes this move like this, give me this and then drop aggressively into this region, this neckline of the new structure that is forming, this neckline region here, this neckline region. If it comes back there, reject and come here and give me some consolidation and rejection in this region, this is where I should be selling. The reason is because I want it to form another structure, head and shoulder. This is the left shoulder of the new structure is about to form. The head is coming here and the right shoulder. With this, I'm 100, I will be 98% certain that this market will sell down because it has taken time to form this structure, head and shoulder here, and it's taking time to form another structure. So once we come this week, maybe this setup might take time. It might not be Monday, it might not be Tuesday. Maybe from Tuesday, Wednesday, we might see this setup. But once we see this setup, guys, we know we are in for 100 pips drop. So we call it 10,000 points on gold. So from here, if we should say here, this is where we were looking at our target point. So which is over, as you see, 105 pips below, which is a very nice trade. If you're using micro lot size, you'll be having $100. If you're using mini lot size, that's $1,000 for you. If you're using standard lot size, that's $10,000. So it's a very good trade potential that we should be expecting come this week. Sell, not buy. Okay. Okay. So that is for gold. So I will not be analyzing other pairs. I just want to give you tips on these two, use these two pairs, gold and Euro USD, to give you tips on how to spot reversals. So guys, I've been able to tell you how to spot reversals with this concept. So go back and test it and look at how you will be able to spot reversal. If you do this, guys, you are 100%, you are 95% sure most times that the reversals is coming. The reversal will come. The first thing, remember, observe the trend. Is the trend dying? Is the new highs not stronger than the previous one? New impulsive move weaker than the previous one? If the new impulsive move are weaker than the previous one, that is the first criteria to show that the trend is weakening. The rubber band man is no longer making a new hole. And then the next thing you need to look out for 100% retracement. Once you see an impulsive move, you see 100% retracement. That is another move, another thing to look out for to know that the trend is dying. And then to know that the reversal is coming. Then once you've seen 100% retracement, wait for a last push that could not make a new highs. Once you see that last push that could not make a new highs, and then consolidation will read, the market will enter into a little bit of consolidation. Just wait for the breakout of that consolidation. Once the market breaks out, anything you do after then, no matter how your entry is, you set yourself on a high probability trade setups. You'll see that your trade will always be banging and your stop loss will not be hit most times. I was able to guide you through with this. So go back and test it. And for those of you who are complaining, my entry is my problem, my entry is my problem, I think this will be able to solve the entry problem. And since I've found these things to be true, since I've started using this strategy, I worry little about my entries because once I see a market playing around a resistance or a support region, it gives me more, the longer the market takes to move in a support or resistance region, gives me more confidence that that trade will sell, will reverse. If the market reaches a resistance and takes time to build up, then I have a high possibility that I'm high confident that that market is going to respect that region because the others takes time to trigger. The big boys takes time for the others to be complete. But if the market just reach and touch and reverse, if I'm in that trade, it gives me, I just look at whatever profit I see. When the market start reversing, I'll just close their end because I know it's coming back again. It's not done in that region. So, but the time it takes to build up, to play around that region with a little bit of rejection, consolidation, rejection, then I know that that is the trade I want to be in. And once that breakout comes in, your trade will just be banging in profit. So thank you very much, guys, for being true to this video. Is a very lengthy one, but I just want to be patient to do this video for you so that you go and backtest what you've seen, look at your strategy, look at your entry, go to any pair you trade, observe and mark it out. One thing you need to understand is as the market is making those moves, it will giving you structure. Structure. You know the treasure I trade is just the head and shoulder structure. Head and shoulder structure. So as the market is giving me that momentum, we are seeing the structure will be forming alongside it. It gives me more confidence that this market is going to sell or is going to buy. The market will not just give you a structure in a higher time frame, maybe daily candle or 4-hour candle, just to do nothing. No. Even if they want to resume the trend, they must obey that structure. And if it's a buy or sell, they will buy a little bit, gives you profit before they change. So all of these are what you should be looking out for in your next trade. So guys, as you do analysis come this week, observe and read the market dynamics, read the rhythm, do your support and resistance, your supply and demand zones, observe how the market plays around as it gets to that region. Is it aggressive? Is it slow? Is it fast? If it's fast, well, the trend is healthy. If it's slow, the trend is dying. So guys, thank you very much for staying true to this video, and I'm signing out. See you in the next video. Thanks.